All right. Welcome everybody. I can see a couple of people are here already. Let's give everybody a little bit more time to join in. Okay. All right. I can see you guys live on YouTube. That is good. Welcome you guys. Okay. AD is active. I can see that. That's good. If you're active, just drop an emoji in the chat either on YouTube or on Telegram so that we can know that you're active. I can see Rebirth is also active. All right, all right, all right. Yeah, drop an emoji. Okay. So today I really we have a lot to unpack today. It's going to be a very interesting session. I understand that a lot of people that are here are completely new to crypto and are completely new to the entire investing are completely new to the entire investing industry, but it is my belief that after this class, you're not only going to understand crypto a bit better, you're going to have a lot more knowledge than the average person out there. So just brace yourself. There's a lot to unpack. All right, all right. So more people are joining in. Cool. By the way, for those of you that are coming in now, I don't know if you missed the message, but you need to register on BTCC Exchange, which are our official partners. So click the link and just register. Use my referral link. Obviously, you're gonna get some bonuses when you do so. So just do that real quick while we wait for everyone else to join in. And if you've done that already, then you don't have to do it. Obviously, let's just proceed. All right, so today, like I said, there's a lot to unpack. To be honest, I'm a little bit surprised that we have this amount of people joining us here today, even though it's a little less than what we usually have. But it is simply because of the fact of where we are currently in the markets. We are kind of in the period where there is not a lot of interest in crypto, and that is understandable because it's a bear market. People do not really like to come into the market when things are down. There's not much hype going on right now, as opposed to when there is a lot of hype in the market. People are really interested in coming in. They want to invest more than they can afford. The hype is there to give them FOMO, to drive the emotion to FOMO into the market, stuff like that. But right now, the market is a bit quiet. There's a lot of uncertainty with the war and everything, so there's really not a lot of interest in crypto right now. But regardless, you guys are still here, so huge congratulations to you for choosing to make this decision to come on board right now. Yeah. So today we do have a lot of stuff to talk about. Um, First of all, let's start by understanding what crypto actually is. A lot of people are completely new here, so I'm going to take my time to explain the really basic stuff here in trying to understand what crypto is. So, let's start from a simple definition. Crypto is digital money. You can't touch it, but you can send it, receive it, save it, and multiply it. Nobody controls it, no bank, no government. It runs on a blockchain, a shared record book maintained by thousands of computers worldwide. So, what this basically means, right? The meaning of this basically is that what we are dealing with here is cryptocurrency and is digital money. There is no centralized system that controls this money, as opposed to your traditional currency, like the naira and the US dollars. Right now, those currencies are called traditional currencies or fiat currencies, and they are also being controlled by the government, right? For instance, if we are having an exchange, if we want to have an exchange, let's say me and you, Mr. A and Mr. B, the transaction can stay between both of us and no other person has to be involved. For instance, in the traditional market, if we want to do a transaction, the government or the central bank has to facilitate that transaction. If the central bank believes that this transaction is fraudulent or they flag it in some sort of way, they have the power to prevent that transaction from happening. But when it comes to crypto, when it comes to what decentralized money can do, you don't necessarily need a third party. You just need an agreement between two parties. An agreement basically. Send me crypto and I'll give you a certain service or a certain good. And it just has to stay between both parties, no central body involved to make that transaction stop. This is because crypto gives you custody of your assets. No other person controls it besides you. There are advantages and disadvantages to that, but I'm going to get into that conversation much later on. But meanwhile, now that we understand what Bitcoin, what cryptocurrencies actually are, let me explain the different types of cryptocurrencies. So a lot of the time, most people get confused by thinking that, you know, I get lots of DMs of people saying that, oh, I want to invest in Bitcoin. I want to do this Bitcoin thing, but that's not really what it is. Think of it like this. Let's say we have a mobile device, right? And then we have different applications in that mobile device. So the mobile device is a whole, cryptocurrency is a whole. It's representing the entire ecosystem, and the apps in the mobile devices are the different cryptocurrencies. So in the whole body is called a mobile phone, and then there are different apps in it. So the whole body is called cryptocurrencies, and then there are different types of cryptocurrencies, right? So the very first and most popular cryptocurrency is Bitcoin. This is because this was the original blueprint. In fact, every other crypto grew based off of this inspiration, which is Bitcoin, right? So it was invented by Satoshi Nakamoto. You have to do your own research on this, but it's a really interesting story. It's a really interesting story. You just need to take your time to research on it a bit. But basically, this guy created it, or this guy or people created Bitcoin, and they just disappeared and removed control from it, removed centralization from it, and basically, nobody can control this asset except. And basically, nobody can control this asset. Now, after Bitcoin came on, then there came other assets like Ethereum and the others. But basically, there are differences between Bitcoin and the other coins. So, Bitcoin, for instance, is a store of value. People just use it to store, like it's like digital gold at this point. You know how you don't necessarily trade gold, you just more like buy and save and store for the long time. That's what Bitcoin actually is these days. But then there is something like Ethereum. Ethereum is not necessarily the second cryptocurrency that came into limelight. It's just the second most popular and second most valuable cryptocurrency out there. That's why it falls in at number two. But you see, what Ethereum does and what Bitcoin does, they are kind of different. Ethereum operates more or less like a platform that allows other cryptocurrencies to build. So Ethereum is more like the founding father of decentralization and smart contracts, DeFi, decentralized finance and smart contracts and all that stuff. This is where Ethereum really falls in, and they use things like smart contracts, which I just mentioned. Other applications can build on it. For instance, the popular meme coins that you guys know, even NFTs and all these stuff, they all started from Ethereum. Ethereum gave birth or gave possibilities for these things to be able to happen by initiating something called smart contracts. So this is, it's a bit technical when you, except you're really into stuff like this, then you can read up on it. But basically what it just means is that Ethereum is more or less like a platform that allows other applications to build. So because it has that feature, it makes it valuable. So developers tend to buy a lot of Ethereum in order to build. And that's why it grows so fast. So that is what Ethereum does. And other cryptocurrencies do a lot of other stuff, but the ones that are most popular, for instance, Solana kind of does what Ethereum does. It just does it a little bit faster, or a lot faster. So Solana is kind of doing what Ethereum does. It has smart contracts, it has DeFi and all that stuff, but its transaction is a lot faster than Ethereum. But Ethereum is vastly much more secure. So there are perks here and there about it. But there are also other altcoins that do a lot of things. There is Chainlink, there is it's a lot, right? And they all do different stuff. Now, this is different from meme coins. Meme coins are just for fun, and they are not nothing too serious. They fall into a different category. They'll fall into the other millions of altcoins that exist right now. But meme coins are not really all that significant. They're just for jokes. They're nothing too seriously like that. That's why I don't really advise people to invest in meme coins. If you really want to get into this market and make money from it, the best investment should be, the sure bankers, like I like to call them, the ones that I know that no matter what, they are going to make me money. It's guaranteed, especially when we are in the middle of a buying season or a bull run, things like that, which I'm also going to explain how to recognize when you see it as we proceed further. But generally, when it comes to trading, right, there is only two things that you really need to understand here, right? It is either prices are going up or prices are going down, basically. So, and for prices to go up, it means that there are lots of buyers in the market. There are more buyers than sellers in the market, basically. And for prices to go down, it means there are more sellers. It means there are more sellers than buyers in the market. That's basically what it means. So, more buyers in the market means it's a bull run or it's an uptrend. More sellers in the market means it is a downtrend or a bear market. It is basically different seasons in the market, and that's really what it's all about. The idea behind trading, the idea behind investment is to anticipate when prices are about to go up, when buyers are about to overshadow sellers in the market. That's basically the best time to invest, and the best time to get out or to start taking profits out of your market or out of your investment is when you start seeing signs that there are bound to be more sellers in the market very soon, and then you don't want to get sold on, so you then anticipate the opportunity and sell in time. So basically, in order for you to win, you have to be able to know when to do these things, when to buy and when to sell. That is the assignment, or that's the goal. That's basically what we want to be able to achieve when it comes to investments. Now, unfortunately, when it comes to this game, we do not really have that much power, right? And the best way to go about making money in this game is just to follow what the big players are doing. So let me explain that, right? There are three different types of players in this market. Excuse me. There's the retail traders, which is you and I, the regular guys. We can't make any significant move in the market that will affect the market significantly. We can't do anything serious to affect the market, right? So we are more or less like the pawns. Let's say this is a chess game. We are more or less like the pawns, unfortunately. But then there are the whales, right? The next level, which is the billionaires and the millionaires. They are market movers, right? They're market makers. They move markets, but they have significantly more influence than the retail traders, obviously, but they are not at the highest level of this ladder. Then there is the institutions. When it comes to institutions, we're talking about banks. We're talking about asset management companies, things like that. So we're talking about investment companies, these big institutions that manage literally trillions of dollars. A perfect example would be BlackRock. BlackRock manages over $9 trillion or $11 trillion last time I checked. There's Blackstone, there is Vanguard, there is JP Morgan, there's Chase. There are all these big institutions. These are the main people in the market. And you see these guys, they watch the markets, right? So the thing is that because we are retail, we are literally at the bottom of this ladder. Literally at the bottom of it. We can't make any influence. The only thing that we can do is follow where the money is going. And who controls where the money goes? The institution. So we follow where the institutions are going. We follow their investment style and we follow exactly what they're doing. That is the only way you can succeed in this market. This game belongs to them. You cannot play against them. You are going to lose. You have to do exactly what they are doing. That is the only way you can win, because they understand the game. They have more influence. They control the markets. Literally, they own the big news platforms. they own everything. They can orchestrate a propaganda if they wanted to and make prices move. They run everything. So there's no reason why you should be doing something that they are not doing. Follow follow their footsteps, and you will understand these things. So the only way to follow their footsteps though is by analyzing the markets and understanding where things are going, generally speaking. Now, so I understand that I'm moving very fast. This is because we don't really have much time, and we do have a lot to to cover. So if you have your questions, don't worry. I'm going to attend to them. I can see people already dropping questions, but just hold off. Let me run through these, and then I'm going to answer your questions later on. Right. So this brings me to the conversation about cycles. Right. So you see, when it comes to investments, generally speaking, everything moves in cycles. They move cyclical. Life itself is cyclical. There's the life cycle, birth, rebirth. Birth, from birth to death, basically. There is the water cycle. There is, what else is there again? There's the plant cycle. There is, everything has a cycle. And it's the same way there is business cycle, and it's the same way there is the crypto cycle. It all has a cycle. The trick here is to understand the cycle. Once you understand the cycle, you then know exactly when to get in, because the cycle repeats. You know exactly when to get in, and you know exactly when to get out. Keep in mind, the word is cycle. CYCLE, because I see a lot of people make the mistakes of calling it cycle, like CIRCLE. It is CY, cycle. Cycle means repetition. It's going to keep going. It's like a wheel. It keeps going, right? The tire moves in cycles. A cycle is static. Cycle is has motion, basically. So you want to understand the cycles to be able to know when to invest in the market, right? And just like I said, everything has cycles. There's the business cycle, there's the investment cycle, there's also the crypto cycles as well. Now, for this particular, so that I don't overwhelm you with too much information, this particular program, we're going to be discussing crypto cycles alone. So there's something I want to show you. This is where it begins to get a little bit overwhelming, but this is what you subscribed for. So let's check it out. Let's go to tradingview.com. Now, this is where you go to conduct your technical analysis. Let's say you want to see what prices markets are doing, be able to project into the future, to conduct your analysis, basically to make your financial decisions. This is where you do it on TradingView. So if you're not registered, just go up on www.tradingview.com and you get access immediately. So I want to look for a clean chart where I'm able to show you, not actually a clean chart, the chart where I've shown these market cycles, which is this one. Yeah, so on looking at this may be a little bit overwhelming, but I'm going to break everything down. Now, you see, crypto generally has investment cycles, right? Just like I've been saying since. But you see, this thing is controlled by something called a halving event. Right, so let's check this out. What does the halving means? Right, so the halving means when the reward for mining Bitcoin gets cut into half. So initially, when Bitcoin started, the reward for mining Bitcoin was about 25 BTC. Yes, so the first halving was about 25 BTC. That was the reward for mining Bitcoin. So what this means basically is that for Bitcoin to come into circulation, these miners have to solve a particular math problem, and then when they solve that, they get rewarded in Bitcoin. That is literally how Bitcoin comes into circulation. The miners mine it, they work for it, basically they get it and then they sell it. So these miners bring it into circulation. So when Bitcoin first started, the first halving, the reward for mining Bitcoin was about 50 BTC. This was in 2009, January 3rd, 2009. 50 BTC. But then the first halving, when it happened, it cut it to 25 BTC. So every 4 years, the halving repeats. and each time it happens, the reward gets cut into half. So you can see here in 2012, 25 BTC was the reward. In 2016, 12.5 BTC was the reward. In 2020, 6.26 BTC. In 2024, 3.125 BTC, which is the current number that we're working with right now. But it has been projected into the future that in 2028, which is when the next halving is going to occur, the reward for mining Bitcoin is going to be about 1.5. So this basically means that the supply that is coming into the market is reducing. And it is basic economics, guys. It is basic economics. Once supply reduces and demand stays the same, or demand increases, prices of that asset, of whatever assets, is likely going to go up. So that is exactly what is happening with Bitcoin right now. The reward, the supply is reducing. The next halving is going to be 1.5. And this thing has an effect in the markets. I'll show you. Like I said, this is a lot of information. The full analysis is actually in another program, which I'm going to be introducing you guys to, but this is just going to give you like a tip of the iceberg. So basically what you're seeing here is whenever you see these white lines are all a representation of the various halving events. This first one here is 2012. This is this next one is 2013. This is 2017, 2021, and 2025. Basically, these are all the various cycles, right? So as you can see here, once this halving happened, see what happened to prices. Once this halving happened, look at what happened to prices. Look at that. Once this halving happens, look at what happened to prices. It literally always blew up. Prices went up as well. But you see, the thing about this investment thing is that it is not necessarily just like that. The market tends to price things in before it is time. So if you notice very carefully, you would see that the best time to invest in the markets was actually before the halving event occurred. Keep in mind, these white lines are all a representation of the halving event, but the best time to invest was over here. Look at this. In this cycle, the best time to invest was over here. Look at this 2017 too. The best time to invest was over here. If you had just bought here and held up all through this period, you would have made a lot of money. Same thing happened here. If you had just bought all through this period, you would have made a lot of money. So this basically means that the best time to invest was about 500 days before the halving event. The next one here too, 500 days. 500 days, you get your perfect buying opportunity. And this is for investments, right? And I've just explained to you why it happened. So it is not necessarily rocket science. It is just basic, pure economics. And it is staring right at you, literally. Sometimes I'm surprised how people miss things like this, because it is very, very obvious. Look at that, another 500 days, and literally you can do this till infinity. You can go on Google, literally you can see when next the halving event is going to occur, which is the 5th, which is around, okay, they didn't put a date yet, but I've seen speculations to put it around April of next year as well. So if that has been projected to be somewhere here, you already have your best investment time. Isn't that amazing, guys? So literally the same way you can forecast or predict when the best buying opportunity is going to be is the same way you can predict the best selling opportunity as well. After you bought, you don't really make any profits until you sell. It is all just unrealized profits. You have to take some profits before you actually make it, before you can confirm that money is actually yours. So this is it. The best selling time as well is almost about 500 days as well. Look at that, almost about 500 days for your best buying and selling opportunities. So it is about 1,000 days in the entire cycle. You invest before the halving event and then you sell right 500 days after the halving event. Is basically what this means. But there is a whole lot of information on this chart. It tells you the various instances where there could be massive drops. For instance, look at this massive crash that happened here during the tariff period. I think this was part of the things that made me really popular on social media, being able to predict this. But basically, it is based on my systems and based on um, the analysis strategy that I use to analyze the market, and I'm able to point out these things while happening in mid-cycle. And now, if you're just an investor, you can hold on all through the cycle and just forget about those major 30% crashes that usually happen in the middle of the cycle. But if it's something that you want to be able to prevent, then you should definitely look more into technical analysis, because it helps you to make money in the short term as well as in the long term as well. Right. So I've just delved in a little bit into the cycles, and it repeats just like I said. The best time to buy is when prices are cheap, and the best time to sell is when they're expensive. I remember one time like that. There's this popular analysis that I usually like to give, which is around the pandemic period, right? You see, that time it was really, really popular to invest. People who they were hand sanitizers were really expensive at the time, right? People were so essentially the pandemic started off in the US, right, and China as well. It wasn't really in Nigeria, but it was already declared as a global pandemic. But someone who was smart about the whole thing would have observed that in the US and in China, part of the opportunities that came for people who were thinking smart was hand sanitizers. Hand sanitizers and toilet papers ran out of store very, very fast. I can understand the hand sanitizers, which is for protecting your hands, but the toilet papers, I didn't really get it. However, it ran out of stock in the stores. Now, somebody that is smart, or someone who was trying to take advantage of the situation, after realizing that WHO had declared this as a global pandemic, would then decide to invest in hand sanitizers and probably buys like lots of packs, maybe 10 packs, for instance, selling at just 100 naira a piece. And then the global pandemic actually hit Nigeria, and it hits hard. Hand sanitizers went up to 1,000 naira per one. And then it's like, that's like 10 times, And then, this guy that got in very early made a lot of money. But then there is this friend of his, which is his neighbor. He sees that, this guy made a lot of money from hand sanitizers business. Hand sanitizers might just be a good business to get into. And then he gets into the market right at when hand sanitizer is going at 1,000 naira per one. And then he even goes as far as, buying truckloads, because this is going to be his retirement plan. He then invests truckloads of money in hand sanitizers, and he's like, he's gonna make a lot of money. And then guess what happens to hand sanitizers? A supply came into the market. What is this supply I'm talking about? People started manufacturing hand sanitizers literally in their houses. Homemade hand sanitizers. They were mixing it with alcohol, doing this and that, but they were locally making it. Do you know what this did to the price of hand sanitizers? It crashed it. It plummeted really, really bad. And basically, that guy must have lost a lot of money, because probably I don't think hand sanitizers has ever been in such demand like they've been. So this guy would have lost a lot of money that he does not even have a chance of recovering soon, except inflation hits Nigeria. So you see how it is important to invest at the right time. When you invest at the right time, you tend to put yourself ahead of others when you're able to, foresee into the future. So being able to analyze the market is the only way you can get this particular information that you're looking for. It is all about timing. Timing is everything that you need for investments to actually really work for you. So basically, you invest when it's cheap, and then you take profits along the way so that you don't lose money. Before we get into rules, okay, let me just talk about these rules actually. When it comes to investments, you want to be sure about what you're doing in terms of what you are buying. Like I said earlier, when I'm investing, if you look at my portfolio, if anyone here has ever been in my private group, you will see that my portfolio, I don't usually have too much meme coins. I don't want to have meme coins except, throwing a few dollars in it. But majority of my biggest holdings are the top major coins. If I have 10 coins, trust me, 70 to 80% of them are in the top 10. This is because I think of these coins as sure bankers. Although yes, there are other opportunities out there. You can make a lot of money out there with some other coins, but I just tend to throw a little money into those ones. But the major holdings, they are on the sure bankers, which is the one that have the test of times, that have tested times basically. That is the best way to be able to be sustainable in this market, in my opinion. Every other thing is a bit more risky than necessary, because this market is like the wild west, right? If you invest in something that is, just playing, that is not really doing anything too seriously, the probability of you losing your money is higher. And remember, the market is not completely regulated, so you want to be very careful when it comes to investing, and you have to avoid, the hypes. Basically, anything that sounds too good to be true, you know what they say, it probably is. Second thing that you want to avoid is FOMO, fear of missing out. This is very, very important. There's a friend of mine that talked about, he was really excited about Nigerian stocks. He told me that not a friend of his, he saw someone on social media, and this person had made like over 300% in 1 year from investing in Nigerian stocks. Now, I must say that is pretty impressive, right? But think about it, right? Before you choose to get into any form of investment, what you want to do is ask yourself, what points in the markets are we now? Are we in a bull run, or are we in a bear market, or is the market consolidating? What is going on? Right, from what I've just shown you now, you can see very clearly that the best time to invest is not necessarily in the middle of a bull run. It's probably, or most likely, when the markets are cheap, right? So if somebody has done is basic knowledge, right, or is basic understanding, if let's say you invested in something and this thing has done over 300%, what do you think would be running through your mind? You'll probably be thinking about, maybe you don't take the entire profit out of the market, but you take some profit, at least maybe like 10, 20, 50%, 70% maybe, of the profit out just to hold. So ask yourself, do you want to be investing in the market when people are taking profits? Because what happens to the markets when people are taking profits is usually price consolidation or a crash. Okay, so you have to be careful with these things. You have to look before you trade. Fear of missing out is what's going to get you to get into a market that is literally at the top, and you end up buying the top. You lose a lot of money, and you then start to hate investments and say investment is not for you, whereas you just did not go about it the right way. A lot of people tend to run away from research, and I really don't get it. Sometimes I get it because it's convenient to not research on anything, but then again, you want to research because this is money that you're talking about, and it is not just any money. It is your hard-earned money that you worked very hard for, and I'm sure you don't want to lose that money. So it's better safe than sorry. I don't like losing money, so maybe that's why I'm thinking like this. Maybe you have better risk appetite. At the end of the day, it really depends on your risk appetite. So when it comes to investments, another big advice would be not to diversify too much, right? So basically, it kind of falls down to what I was saying earlier. There are students, or there are old clients of mine that I've managed to change their perspective on investments. Sometimes they could go as far as having up to 20 coins in their portfolio. Half of the time, they don't really understand what these coins are. They don't know what is going on with these coins. They don't know why they exist, what they're trying to solve. Most of the time, it's just hype. No reason for investing in these coins. And if you discover something in the last cycle, this one that just passed now, you discover that out of all the coins, it's even turned out that if you had just invested in Bitcoin, you would have made more money than choosing to invest in altcoins. This shows you that the market is maturing, things are changing, and before you even start investing in other coins, at least invest in the sure bankers. You don't need to have 20 coins in your portfolio. 5, 10 for beginners is okay. 5 is even okay in my opinion. And if you can do 1 or 2, it's also not bad. Trust me, this is not a game, right? It's a game anyway, but you don't want to play this game like that where you're just throwing your money left and right, because it's your money. I don't know why I'm reminding you of that. You probably know that it's your money, so but just you want to be careful with it. If not, you're going to hate investment if you do it wrongly. Now, number 4, you need to have an exit plan. Most people only plan for investment, but they don't plan for how they are going to get out of the market. This is something that I always like to preach a lot. When you are getting into the market, yes, you've made a lot of money, but what is your plan on exiting? Because what goes up must come down. There must be a time markets are going to drop. So what would be your signal to get out of the market? These are the things that you need to look out for. Maybe it's a particular price points that you need prices to get to first. Maybe there is a particular money you want to make, profit you want to make first before you sell. Whatever it is, have an exit plan. If your exit plan is based on your strategy, just like me, I don't just exit the market randomly. There are certain things that I look for in the market before I exit. Even though I've done all my analysis, I've looked at all the cycles, there are still things that I need to look out for to keep me certain. Right, there's a whole lot packed in this stuff. It's really a lot. I definitely cannot cover everything in 1 hour, but yes, it is definitely there's definitely a lot to look at when it comes to exiting. But yeah, you need to have an exit plan when you're coming into anything. It is not just about buying, it is also about taking profits and making actual money. You don't want to be sitting with unrealized profits in your bank account, right? So also, lastly, you want to invest what you can afford to lose. Don't be like me. I'm a bit reckless these days. Like, I have about 90% of my funds in crypto right now, whether it's USDT or I don't really have lots of crypto investments right now, but I do have lots of stables, right? So basically, I have like about 80 to 90% of my entire cash worth in crypto. I usually like to make a joke whereby I say stuff like if I got robbed today, God forbid anyway, but if I got robbed, the thieves are probably not going to take the most valuable thing in my house, because the most valuable thing is probably going to be in a book. Who comes to your house to steal a book, right? You probably won't even know which one it is. It's scattered. So basically, when you're able to that's actually, by the way, what I was talking about is you want to invest more than what you want to invest. You don't want to invest more than what you can afford to lose. You want to start very, very small till you build a little bit of confidence before you actually start getting into taking a little bit more risk. Right. So let's get a little bit more practical. Before I show you a little bit more things, there are still a couple of things that you need to do in order for you to get into this market properly. First thing you need is that you need to get an exchange. Remember that I said that you should register with BTCC because they are partners. That is where you want to buy, right? That's where you can buy and sell your crypto. Keep in mind, this is just for buying and selling. It is different from your wallet. Your wallet is just for storage. When you buy on a crypto exchange, you don't want to store it in your crypto exchange or keep it there. No, you buy from a crypto exchange, then you move it out of that crypto exchange into a non-custodial wallet. An example of a crypto exchange is BTCC, Binance, Bybit. These are crypto exchanges where you can trade on. But for storage for investment long term. Let's say you want to hold it for a year or 2 or 3 years, 4 years. You want to get yourself a wallet. An example of a wallet is something like Trust Wallets, Exodus Wallets, things like that, that they provide you with something called 12-word phrase when you register. Now, this 12-word phrase, you're supposed to write it down in a book, in a piece of paper, and keep it. Do not store it online, because if anything should happen to that 12-word phrase, your money is gone. Right? Whoever has access to that 12-word phrase literally has access to your money. And unfortunately, you can't report, right? You can't report to anybody for this, because they don't control your funds. Trust Wallet does not control your funds. You are the only one that has access to that funds with that 12-word phrase that was given to you. So you want to protect it. It's just like your documents when you purchase a land, right? If somebody takes that document and decides to sell the land on your behalf, the land has been sold, right? Whether or not it was with or without your permission, as long as the buyer has the property, the land belongs to him. So it's basically the same thing here. Your 12-word phrase is your document, and you have to keep it as much as possible. Then there's also starts with dollar cost averaging, which is somewhat similar to when I'm saying you should invest little by little. So just invest little by little. Some people do it monthly, some people do it weekly, just a little bit of money here and there when it comes to investment. So one more thing before, I just want to show you a little bit of some chart patterns that can really, really help when it comes to technical analysis. Let's go here. Chart patterns are part of the things that you can use for your trade execution. There is a lot packed in one of my programs. I'm almost done here. I just want to show you these chart patterns because I think you're going to find them interesting. Right. Guys, hold off. Okay, you know what? After I'm done with this session, you can start dropping your questions, and then I will start answering some of them. Right. Okay, so there are a couple of patterns in this chart. I'm going to share this link with you guys so you can have access to it. But there are a couple of patterns here. But there are two types of patterns. There is a continuation pattern, and then there is a reversal pattern. I know this may sound complicated, but basically what this means is that it shows you what is going on in the chart and probably things to anticipate in the chart. For instance, if prices are going to drop, something like a head and shoulders pattern would show you that once you see something like this in the market, a head and shoulders, it means prices are going to drop. That is basically what it means. Supply is building and prices are going to drop. That is basically what it means. And if I show you an example here of when this played out, this is a perfect example. Let me go to the 1 day. This actually happened in the last cycle. It's one of the best examples that I always like to use whenever I'm talking about this. So look at this right here. We had this move here, right? Okay, let me just use this tool to draw it. Okay, so we had this is the first shoulder, then we had this to be the head, and then this is actually the second shoulder here. I'm going to rearrange this. Yeah, this is actually how it's looking. Something like this. Right. So it's not perfect, but you get the idea. So prices move here, right? It forms a high, then forms a higher high, which turns out to be the head, then drops down significantly, but then bounces up. But it's not able to really break above the previous shoulder or even be able to test the previous high. So this makes it a head and shoulders pattern, and it is a reversal pattern, implying that prices are going to drop way further. As you can see, that's exactly what it's talking about. The double top as well is also a reversal pattern, whereby you have a top here, you have another top here, and it creates a supply situation and leads to market dropping. We have something similar that happened here in In the cycle, in last cycle here, you can see it very clearly. Look at this. One top, another top, double top, and look at what happened. It led to a market crash. There are several examples of this. Um, there's also one that I did recently. Like I said, I'm going to share this chart with you. I'm actually just trying to rush this particular information. But you can see this one is called a rising wedge. This is actually the most recent one that we did in the private group. Let me show you. Okay, before I show you, let me explain what it is. So you can see prices moving up to the upside where we're having higher highs and higher lows. So this is basically a trap. It is actually a bull trap going to trap buyers. So you see markets moving up only to drop. Look at that. So your entry will be somewhere here. So look at this. This is a perfect example of when I did it recently in my private group. Over here, let me see if I can get you guys to see this. Right. I think this is just, yes, this is it. Look at this one. You can see how prices moved like this. Right, so it's literally in the middle of playing out, but you can see how I was able to identify this chart pattern, and it is very, very similar to what prices did. If we even check the most recent charts, you can see it very clearly. This is where I conducted the analysis for the trade, but you can see it very clearly. Look at this. Very clear move. And even in the previous, if you look in hindsight, you can see where the exact same thing happened before. We had prices moving up slightly, causing a trap, and then look at the heavy crash in the market. So this is basically what chart patterns can do for you. It can give you a very, very good hedge when getting into the markets. These are the things that trading, or this is short-term trading, not really investments, but these are the things that you can get when you completely understand the market. So basically, I developed something that is called a beginner's course, and this beginner's course, it's actually a value of over $100, but I'm giving it to you guys for $6 only. Why am I saying it's $100 worth? Just look at the information in it. We have 4 modules and 12 videos. 12 full videos. You see all these things that I talked about, investment, that I talked about getting into the markets, trading and all that stuff. All this is discussed here. Whatever I just taught you now, even if it sounds like a lot, it is literally just the tip of the iceberg. Trust me. I'm not one to give unnecessary information. If I'm giving you something, just know that it is very, 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 very valuable, literally. So we have investment and fundamental analysis. We have introduction to technical analysis. We have crypto market essentials, which is basically how to use TradingView. In investment and fundamental analysis, you know how to conduct analysis for investment purposes. In introduction to technical analysis, you will know how to analyze the market for short-term entries and long-term entries, just like I showed you in the trades that we took recently. And some of the trades that I've taken, not all of them are short-term trades. Some of them are even long-term trades. One of my trades is over 1,000% in profit right now. Let me see if I can show you that on screen. Let me actually look for that screenshot. It's really crazy what that trade looks like right now, but this is a trade that I've been holding for about since October, November last year. I've been holding on to this trade for that long, and I'm still in profits, and I'm not even really considering closing the trade all too soon right now. So this is what you get when you are able to analyze the market fully. Like literally analyzing the entire thing from a larger time frame, like the 1 week, the 1 month, like from an investment or from an investor's point of view. That's the only way you'll be able to get such results. So let me show you that. Where is it? Actually, let me just show you on my phone. Hopefully you can see this. One of them is sitting at over 1,000% in profits. This is BTC trade, and this was done on about 10x leverage. It's insane, trust me. I hope you guys can see this very clearly. Yeah, you can see this is over 1,000% in profits. Over 1,000, and it's a short position. Let me show you where my entry was, so you can see how crazy it is. My entry was around $97,000, which is literally here. So you can see I'm not just talking off the top of my head. Look at my entry right here, $97,000, and I'm still holding all the way till now. I've still made other entries, like added to the position, and in my private group, as you can see, I made the calls here. So basically, these are kind of the crazy things that you can do. There's also another trade that I took. I took an Ethereum trade as well, which is sitting at over 300%. There's also one that for my clients, one of my clients, that is sitting at over 500% in profits. And this one is just 10x leverage. There's also XRP right now sitting at 172%. If I told you that I only did this one with 3x leverage, you can see that. Basically 3x leverage on this particular trade. So these are kind of the things. This is what's possible when you are able to get into my take this course. Basically, it's just $6. And guess what? Apart from all of these benefits, which is all of these 12 amazing videos, you also get 1 month access to my private group. Isn't that amazing? So I think I've really covered a lot in this. We've managed to stay in time as well. So if you have questions, definitely drop your questions. But if my private, if this beginner's course is something that you're interested in, then you should definitely drop me a DM, and I would attend to you, obviously. So let's entertain some questions. What questions do you guys have for me? So you guys drop your questions. Go ahead and drop your questions. Okay. How much is the fee to subscribe? I'm assuming that you're talking about my private group. So my private group is not actually paid for. It's actually like an added advantage for joining, for taking my my course. You actually get 1 month access to my private group once you join in. Once you take this course, actually, but after 1 month you get to pay only $3 monthly. So I think that's pretty cool. So it's just about $3 monthly, but you can't get into my private group without taking any of my programs. It's on purpose, because you need to understand what I'm doing before you trust to take my trades. When is the right time to invest? Wow. Okay, so I literally just discussed on this. You're probably going to have to take this course in order to understand it, but this was literally what I spent the entire time discussing just now, which is how to invest in the market, the right timing. You're going to have to watch this video again, probably, or just take the course and you get all the information. How much is the advanced trading? Okay, so if you're not a beginner, like if you're not interested in a beginner's course, I have an advanced program, of course. That one is going for $33. That contains literally all of my trading strategies. I have 4 major strategies that I use to get into the market, whether it's on a bigger time frame to the smaller time frame, and all of that is covered in my advanced course. There are 2 of them. This is the beginner's one, which is why I'm just telling you guys about. But there is also the advanced one, which contains a whole lot more. I've told you 4 of my strategies that I use to get into the market. Literally, I don't have any other strategy that I use besides this 4. So, and it's going for just $33. I know people who charge a whole lot more for that. People charge thousands of dollars for it, actually, and I'm only charging $33. So that is definitely something that you should pick out on. Any more questions? Okay, yes, this is BTCC Exchange, the first one, Mr. AD. Yeah, that is BTCC Exchange. All right, awesome. Do I still have more questions? Is crypto legal in Nigeria? Well, yeah, it is. It is legal in Nigeria. I know that a lot of people might have been a bit confused about, whether or not it is legal because of the fact of um, the central bank and all the restrictions. It was just restricted. It wasn't banned, so to speak. It was just restricted, meaning that the central bank cannot really they're not permitted to facilitate the transaction. They can only they can't do anything literally. So when you're doing your transaction, just don't put crypto in it. But you can use crypto in Nigeria. It's not illegal. Okay, so if you have any more questions, I think our time is far gone by now. If you have any more questions, guys, drop it in the comment section or in the group, or anywhere that you're watching this from. Just drop your questions, and I'm definitely going to respond to you. This has been very, very interesting. I know you guys have enjoyed it as well. By the way, remember, if you want to get into my beginners program, send me a DM, and you get a free 1 month access to my private group, of course. All right, guys. So this has been awesome. Keep your questions coming in, and we'll keep in touch. All right. Bye, guys.